Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Xeris Biopharma Holdings Inc. Annual Report. Xeris Biopharma Holdings Inc. is a commercial-stage biopharmaceutical company that specializes in developing and commercializing therapies for chronic endocrine and neurological diseases. The company offers a range of innovative treatments through its pipeline. One of the key products offered by Xeris Biopharma is Gvoke, a ready-to-use liquid-stable glucagon designed to treat severe hypoglycemia in pediatric and adult patients. Another notable product is Xeris, which is used to treat hyperkalemic, hypokalemic, and related variants of primary periodic paralysis. The company's portfolio also includes Recorlev, a cortisol synthesis inhibitor for the treatment of endogenous hypercortisolemia in adult patients with Cushing's syndrome. In addition, Xeris Biopharma is developing XP-8121, a once-weekly subcutaneous injection of levothyroxine that is currently in Phase 3 clinical trial for the treatment of hypothyroidism. Overall, Xeris Biopharma Holdings, Inc. has established itself as a leading player in the biopharmaceutical industry with its innovative treatments and commitment to improving patient outcomes. Unfortunately, I don't have access to the text you provided. However, I can still provide a general overview essay on what could cause a stock price to increase. The stock price of Xeris Biopharma Holdings, Inc. has increased in the past year due to several factors that have contributed to its growth and success. One key reason is the company's innovative approach to developing new treatments for various diseases, including diabetes and acute pain management. Their flagship product, Gcon, has shown promising results in clinical trials, which has boosted investor confidence. Another factor contributing to the stock price increase is the company's strategic partnerships with other pharmaceutical companies. These collaborations have enabled Xeris Biopharma to expand its reach and access new markets, further solidifying its position in the industry. Additionally, the company's commitment to research and development has led to a pipeline of promising products, which are expected to drive future growth. The increasing demand for biotechnology products and services has also played a significant role in Xeris Biopharma's stock price increase. As the global healthcare landscape continues to evolve, companies that specialize in innovative treatments and therapies are becoming increasingly attractive to investors. Furthermore, the company's strong financial performance, including revenue growth and reduced expenses, has helped to drive up its stock price. Overall, the combination of Xeris Biopharma's innovative products, strategic partnerships, commitment to research and development, and strong financial performance have all contributed to its increasing stock price in the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth for a company can be attributed to several key factors. The sales of Recorlev, Gvoke, and Xeris products have been significant contributors to the company's revenue growth. Additionally, development partnerships with other biopharmaceutical companies have also played a crucial role in driving revenue growth. Furthermore, the introduction of XP-8121, a once-weekly subcutaneous levothyroxine, has generated substantial revenue for the company. On the other hand, the primary drivers of revenue decline can be attributed to competition from approved generics and other versions of Recorlev. The outcome of patent litigation and potential loss of market exclusivity for Recorlev have also contributed to the decline in revenue. Moreover, the loss of key employees, including members of the executive management team, has hindered the company's ability to attract and retain qualified personnel, further exacerbating the decline in revenue. In conclusion, a combination of factors has driven the company's revenue growth and decline. While sales of proprietary products and development partnerships have contributed to growth, competition from generics and patent litigation have led to declines. The net income and profit margins of the company underwent significant changes between 2024 and 2025. Initially, it appeared that net income decreased by $21.7 million, 17.6%, from $123,419,000 to $145,119,000. However, further analysis revealed a substantial improvement in net income, with an increase of $55.39 million, 101% change, for the year ended December 31, 2025 compared to the previous year. The profit margins also showed a significant improvement, increasing from -43.9% in 2024 to 0.2% in 2025, indicating a 116.7% change. This turnaround was attributed to improved commercialization efforts and product sales, which contributed to the company's net income growth. On the other hand, factors such as increased rebates for Medicaid programs, mandatory discounts, price controls, and cost containment measures led to a decline in profit margins during previous periods. The reasons behind these changes are multifaceted. While some factors, like commercialization risks and market consolidation, posed challenges to the company's net income, others, such as improved product sales and marketing efforts, contributed to its growth. The company's ability to adapt to changing market conditions and regulatory requirements played a crucial role in its financial turnaround. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. According to the data, the net cash provided by operating activities has increased to $28,626,000 in 2025. This positive trend suggests that the company is successfully managing its day-to-day activities and generating sufficient cash to meet its financial obligations. The generation of positive operating cash flow is a crucial indicator of a company's financial health. It implies that the business is profitable and able to cover its expenses without relying on external financing sources. In this case, the company's ability to generate $28,626,000 in net cash from operating activities demonstrates its strong operational efficiency and financial management skills. Overall, the data suggests that the company is generating positive operating cash flow, which is a key indicator of its financial stability and sustainability. This trend is likely to have a positive impact on the company's future performance and prospects. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, the debt level increased due to the exchange of existing convertible notes for new ones with a higher principal amount. However, by December 31, 2025, the total debt decreased from $232,108,000 in 2024 to $220,335,000 in 2025. Despite this decrease, interest expenses have shown mixed results. On one hand, there are instances where interest expense has decreased, such as a -4.6% drop from 2024 to 2025. However, on the other hand, interest expenses have also increased significantly, rising by $2,585,000 or 74% from 2024 to 2025. The inconsistency in interest expense changes suggests that the company's financial situation is complex and influenced by various factors. While the total debt level has decreased, certain types of debt, such as the outstanding balance of 2028 convertible notes, have increased. This highlights the need for a more nuanced understanding of the company's financial health. Overall, the changes in debt level and interest expenses indicate that the company is navigating a challenging financial landscape. While some indicators suggest improvement, others point to increasing costs and complexity. The performance of various regions in the pharmaceutical industry has been mixed. On a positive note, the European Union (EU) has seen significant progress with the approval of Ogluo in the UK and EMA approval for ready-to-use glucagon for CHI and NIPHS. Similarly, the US market has also performed well, with Recorlev approved for endogenous Cushing's syndrome, and existing products Gvoke and Kevais already on the market. However, international markets have faced significant challenges, including delayed or denied regulatory approvals, reduced target market, and unrealized market potential. These setbacks have hindered growth and expansion in these regions, highlighting a stark contrast to the success seen in the EU and US. The management of this company is optimistic about its outlook, citing sufficient cash resources to sustain operations for at least the next 12 months. The company's strategy focuses on commercializing existing products such as Recorlev, Gvoke, and Kevais, while also advancing its pipeline candidates through significant research and development (R&D) expenses. Intellectual property (IP) protection is a crucial aspect of the company's strategy, with patents playing a key role in maintaining market exclusivity for its products. The company is also leveraging its proprietary formulation technologies to create new products like XP-8121. However, it faces significant risks related to competition, regulatory changes, and financial constraints. The company's therapeutic focus remains on developing therapies for chronic endocrine and neurological diseases in the U.S. While specific information on future growth plans or market expansion is not provided, the overall strategy appears to be centered around commercialization, R&D, and IP protection. The company's financial activities have been focused on share repurchases rather than dividend payments. One notable instance is the conversion of convertible notes, which resulted in the acquisition of additional shares by the company. Additionally, shares were repurchased to facilitate repayment of a PPP loan. These actions indicate that the company has prioritized buying back its own shares over distributing dividends to shareholders. Concerns about inventory buildup or supply chain disruption are evident throughout the extracted summaries. On page 27, it is explicitly stated that there are concerns about inventory buildup. Similarly, on page 85, another instance of inventory buildup concern is noted. The potential for greater than expected product returns to exceed return reserves and inaccurate data from third parties, page 29, could lead to supply chain disruptions. Furthermore, the reliance on single-source suppliers and limited number of possible suppliers for certain key materials, page 32, poses a risk to the supply chain. Long lead times, manufacturing defects, potential damage or destruction of facilities, raw material shortages, geopolitical issues, and dependence on contract manufacturers, page 33, are all factors that could disrupt the supply chain. Additionally, changes in regulatory requirements, supplier failure to comply with regulations, loss of access to critical services, natural disasters, accidents, fluctuations in demand, and difficulty finding new sources, page 34, may also cause supply chain disruptions. The potential shortages in supply of marketed products, page 35, could be material, indicating a risk to the supply chain. Information technology system disruptions, page 62, may disrupt operations, including supply chain management. Tariffs, government shutdowns, military conflicts, economic downturn, inflation, and interest rates, page 68, may also disrupt supply chains. The significant increase in finished goods inventory from $5.452 million in 2024 to $19.368 million in 2025, page 95, is a clear indication of inventory buildup. Chargebacks, patient copay assistance program, and product returns, page 91, may indicate inventory buildup or channel inventory levels. In conclusion, the extracted summaries highlight several concerns about inventory buildup or supply chain disruption, emphasizing the need for careful management to mitigate these risks. That concludes the financial summary for Xeris Biopharma Holdings Inc. Feel free to comment below, and I will be happy to answer them when possible.